The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 30 minutes to go until the start of trading. And man, we started that trading already at about 3 a.m. The acceleration began, folks. We have the S&Ps right now down 1.6%. You're negative 68 points, trading at 43.21. Not that long ago, folks, we were 100 points higher. We had markets in positive territory. Went to bed last night. So you know what? Market's getting a little bit of bounce. That's healthy, not too surprising after one of the worst weeks we've had in recent history, and not so much the case, folks. The selling is not done yet, at least in the pre-market. We'll see where they open. But right now, you're looking at markets accelerating in pretty dramatic fashion. I mean, you just back it up to where we were at 7 in the morning, folks. You're negative almost the entirety of the negative action in the market in terms of your 63 points in negative action just in the last 2 hours, and you're 72 on the session in negative. You were positive by 40 to 45 points overnight. NASDAQ 100 leading the way in negative territory. You're off more than 2% right now. I mean, you check out this chart on a daily basis, man. Quite a slide, folks. You're talking about 2,500 points from January 4th. 2,500 points from January 4th. My goodness, quite the drop-off to begin 2022. So much for 27% returns in 2021. We're not even a month into 2022, and you're going to cut that by double digits probably in terms of kicking off the year with one of the worst weeks we had last year, and it's accelerating to begin this week. It's not stopping, folks. NASDAQ 100 right now down 2.1%. You got the Dow. The Dow, I mean, you are back to critical levels in the Dow. Dow prices, you're back to April of last year. April of last year, almost giving back 9 months of action in the Dow. You're negative almost 470 points, down 1.4%. Bitcoin had quite a weekend, and it's not stopping, folks. I said it on my program last week. You break 40,000, next step's 30,000. It's natural. You don't have to be a brilliant technician, folks, to look at this chart and say, when it breaks this level, where's the next level it goes to? It's super clear on Bitcoin, and it's 30,000. And if you make it below 30,000, 10,000 is the number on Bitcoin. Ethereum, down 21%. Next stop for Ethereum, about 1750. At least 2,000. You're trading at 2161. Complete meltdown in cryptos. You jump over to Coinbase. They're getting punished, of course. Coinbase. Now, that's the daily. You're going to open down $21, more than 10% right now. Okay? I mean, they're in a max pain situation. The market's selling off. Cryptos are selling off. You pull up the daily on Coinbase. Folks, we're going to open at 170. This chart had a base of about 220. Your first day public, you pushed up to 429. You were just trading in Coinbase at 368. You're going to open at 170. Talk about the wild, wild west of crypto investing. You jump over to crude. You're down $1.82 at 83.45 so far this morning. Crude giving back some of the recent gains it's had. You jump over to gold. Gold trading higher, up $5 at 18.37. We jump over to silver. Silver negative 50 cents right now at 23.82. And we jump over to the VIX. Talk about catching a lift. There's some action for you, folks. The VIX, from sitting at 18 just 11 days ago, you're pushing 33.77. Now, you put the VIX on a weekly, all right, taking out the first spike that we had in terms of the volatility on the March of 2000 collapse in the markets. You take a look at the VIX since then, okay? We are now approaching the levels that you may get a spike, a pullback here. I talked about it last week. Let's put it back on a daily real quickly. And, I mean, maybe it was as you know, Tuesday or Wednesday of last week saying, is that Tuesday or Wednesday? No, this is going to be today's day, the 24th. Yeah, so that's Friday, Thursday, even Wednesday. Yeah, Tuesday or Wednesday last week saying, listen, we're at 22 or 24 in this market right now for the VIX. And I was talking about that if you think that's a spike in the VIX, all you got to do is look at this chart. And many of the spikes are up into the 30s, the high 20s, at least 35 there. We're in the ballpark, folks, of a potential spike because you just go back. The entire pandemic, we have not had spikes basically above 41 or 44. We're approaching 34 right now in the VIX and the volatility index. All right, where do we begin, right? Well, let's kick things off with some of the headlines here. So we have a Fed meeting this week. They may signal rate hikes coming in March. That's going to be one of the things the market watches most, as the Federal Reserve will signal. Now, this says next week. That was written Friday, okay? But talking about this week, whether they're going to raise rates in March, and expectations are that may be in game. A majority of 45 economists predicted the U.S. Central Bank will use the meeting that begins tomorrow, ends on Wednesday, to telegraph a 25 basis point increase in the benchmark rate, though two look for a surprise 50 basis point hike, which would be the largest since 2000. Economists surveyed between January 14 and 19 evenly split between expecting the Fed to hike 3 or 4 times in 2022. So you've got about a coin flip right now in terms of whether we get 3 hikes or 4 in terms of expectations. They got a 2-day meeting, statement out 2 p.m. on Wednesday, press conference 2:30 p.m. Eastern time on Wednesday. Fed rate liftoff is likely in March, and rates may gradually rise in 2023. So check it out. This is quarter by quarter here, okay? So right now, we're talking about January of 2022, okay, a quarter basis point. March, they're approaching possibly 50. I mean, look how quickly this can rise, folks. We're talking about you push things out. Now, this goes into next year. That's a full 2 percentage points. That's 8 rate hikes, technically. 8 rate hikes gets us to 2.25% if we're sitting in the 0.25% right now, right? 8 quarter basis point rate hikes over the next 2 years. That's a lot of rate hikes, man. 8, 16, 24. That's a rate hike every 3 months for 24 straight months. Now, all things considered, the market has priced a lot of this in, which is what a lot of analysts are talking about. I mean, it doesn't get much more bearish right now in terms of the outlook for rates, the outlook for growth stocks, etc. You get into the guidance expectations. Most economists expect the FOMC statement to signal rate hikes at the next meeting. So 43%, excuse me, may be appropriate at the next meeting. 43% thinking it may be appropriate soon in terms of whether they're going to telegraph that. Basically a coin flip. Dicey action going into the market that we have right now, where you have a 50-50 shot thinking whether it's going to be coming in March or not. Interested to see how the market reacts when you have kind of a binary action there, where the Fed, it's coming. Is it coming in March? I don't know. Economists say about 50% of them think, yeah, they're going to telegraph it. Well, if only 50% think so, then there should be some action either way as the market alleviates an unknown come Wednesday. But as we know, folks, you're going to get the statement at 2 o'clock. 2:30, you're going to get the press conference. Man, Wednesday afternoon is going to be an interesting one. He's going to have a few interesting questions coming up for what the market has done. And how they're going to meander a market falling apart right now on the premise of the Fed hiking rates. That's not what Jerome Powell wants, to say the least. What else we have this week? We got Apple earnings on top of it. I think they are Thursday. Let's pull it up. You got Apple right now trading at $159. Again, so much for the $3 trillion mark, man. Remarkable how these things go, right, folks? What happens? Apple gets over there like one day. For like 1 to 2 days, they're in the range. What was it? Yeah, they technically got over there on January 3rd. They closed above that area. No, they didn't even close. Did they never close above that area? Never closed above the $3 trillion. And then sold off. They're going to open at 160 on Apple shares. We'll talk about Apple. They get their earnings coming up this week on top of everything else. Stay tuned, folks. We got a lot to cover.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&P's negative by 64 points right now. You're catching a little bit of a bounce. You almost can't even see it on this chart right now, but the S&P's just bounced 15 points in the matter of a few minutes. Any other chart, it would look pretty dramatic, but not when you sell off by about 100 points since about 3 a.m. Eastern time this morning. NASDAQ 100 still down about 252 points. I talked about Apple. So Apple, you're now $22 off of the $3 trillion mark. Apple, more than 16 billion shares outstanding. So what is that? You're talking about you're going to be down to jumping over the fundamentals on the Thinkorswim Analyze tab. Yeah, 2.6, just like that, $400 billion wiped out in market cap for Apple. $2.6 trillion, still not too shabby. At 160, you jump over to the Analyze tab, we jump over to the earnings. I believe they're out Thursday. Yes, Thursday, January 27th. They'll be out with their earnings. Not that big of a move right now, priced in, especially considering the volatility you're getting in the general market. Now, the one thing I will say, this number predicated off of Friday's close, okay? The one-day market maker expected move. This gives you the move that is expecting for a move that is tied to the volatility priced into the options of an event of some sort, okay? Now, you jump over and you look, and Kevin Hincks has talked about it many times. It's where the implied volatility for the front month is actually above the other months going on. You know there's some type of event going on this week. What that means is, guess what? We know the event. We have an earnings event going on. What's interesting is you want action through the entire week. You're talking about $9 of action for Apple. That's probably going to go up at the open as the VIX is spiking, as the market going to make participants pay for defined risk, with the market moving 1.5% before it even starts trading for the week. But you're looking at a $6 to $7 move as of Friday. You're looking at $9 as of Friday. Weekly probably going to have $9 to $10 of action priced in when we open for the weekly event. Apple be out with their numbers. It'll be interesting to see. They got a lot to answer for in terms of expectations, in terms of new product cycles, phones, supplies. How are they doing getting the supplies? We've had reports come out over the last year or so, occasionally, that they might have some supply issues. We'll see what happens. Pulling up Apple right now, I was just taking a look at some of these tech stocks. You back it up to, yes, this is going last. Excuse me. So the run the market's had in the final quarter of 2021, Apple starts it off at about 140. You rise up to 182.94. You ring the $3 trillion mark. We're now through the 382, folks. I mean, you're through the 382. You can easily come back to the 618. You're talking about another, I was going to say $7, but that's, again, the close of Friday. We're talking about 160. You're only $5 away. You're at 160. You're exactly at the 50% right now when Apple's run that it had from October. Maybe you're looking at 155 on the way back. Next stock we're going to take a look at, Kohl's. Interesting action here in Kohl's. Now, talk about an acceleration. Kohl's is trading at $61, folks. There's $61 on this chart. I just highlighted, okay? There's your 15-minute action on Kohl's. Now, the action on Kohl's is that they have an activist investor interested, taking them potentially private with a $9 billion bid. So Sycamore expresses interest in Kohl's after Starboard-backed bid. So they received a $9 billion bid from Acacia, which is backed by Starboard. Sycamore also emerges as a potential buyer. Kohl's is an interesting one here in terms of just the resilience the stock has had. You're going to open at 61. You're going to be pushing above levels that you were at to end 2019. Now you back this up even further, and you see that $80 was the mark this thing hit a couple times. $60 is where this thing is going to open at, but you were down at almost $10 during the COVID lows. Kohl's very resilient during the pandemic, and they are going to open about 30% higher, man. Quite an acceleration. But I talked about it during the holidays, that I was actually finding certain items available at Kohl's for cheaper. Then you get your Kohl's box. They try and get you in the store. It seemed like they were doing things right. You probably have private capital seeing the same type of opportunities and looking at that brand as undervalued. They think they can pay $9 billion and build it up from there, and they very well may be able to. Kohl's has a pretty good reputation in retail. That's my take on things, at least. Okay, what else we got going on? We got a lot going on. Let's jump around. Let's start it off with Bitcoin. So, tumbling below 34,000. I think we're talking about trillions of dollars, folks, approaching. There's the chart as we talked about. Well, that was up there. Not sure where that correlation went, but you have a max pain situation here where Bitcoin is pulling back as well, but you also have the market pulling back, which is going to be just, I mean, everything's getting sold here across the board, folks, and a bubblicious asset like Bitcoin just hit 32,000, actually, 855. That might be in from a max pain situation, because it's going to be a moment of truth here at $30,000, which I expect will hit at some point in the future, near term. Okay, other stocks we got with action. Let's jump down the list. Peloton's got some action today as well, man. Poor Peloton, the CEO. He's taken a beating, and it continues. So you got activist investor Blackwell's Capital calling on Peloton to fire the CEO, and sell the company. Just basically get out of Dodge, man. Sell it off, sell the assets, get what you can, and cease doing business, is what they say. Peloton shares going to open a little bit lower on that news. This one's going to be a Harvard study at the Harvard Business School in terms of management going wrong. Talk about lining up all things perfectly for an at-home exercise equipment maker during the pandemic, and they mismanage expectations in dramatic fashion. You're going to open at $26.50, and yeah, you can make a very real case that this company, trading at prices below the pandemic, obviously doesn't have the management it might need to succeed in the future. Selling off assets at this point, it's pretty unfortunate you're going to sell them off here, right? I don't know if you would have found any suitors when it was trading up at this price, but when this went public, folks, and it doesn't mean that it was bound to fail, right? Brilliant people can change the world. Making a piece of an exercise piece of equipment, I mean, the Bowflex, right? What's the skiing one? There's a million that have been out there, folks, and they all make millions, if not hundreds of millions of dollars selling those pieces of equipment. But they have the ability to have so much competition that eventually they fade out of existence and something else becomes the fad. Not necessarily going to happen when you're signing people up for recurring payments, but keep it in mind. You know, they didn't change the world. They slapped an iPad on an exercise bike, sold it to you for $2,000, and then said you're going to have to pay $50 a month to use the service that you just paid $2,000 for the product for. That's the one I can never wrap my head around. So when, you know, they talk about maybe selling off, it seems like maybe a bigger company might be able to incorporate that into their business plan better than just competing on their own. But nonetheless, they had an opportunity during the pandemic, and they squandered that opportunity in pretty dramatic fashion. You're still talking about a company right now, just for some context here, that is valued at $8.6 billion. I mean, that's what Kohl's is probably going to get bought out at, $9 billion at a 33% premium or whatever it is. You're still talking about a $9 billion company. But boy, you were not probably worth, well, what were you? I mean, geez, you were up there trading, what, $50 billion at the tops about? Dicey action in a big way. What else we got going on? Snapchat's trading lower. They get a downgrade out there. Jump over. Yeah, I mean, this company. And this is where, folks, if you have some powder dry, we're in the midst of a pretty dramatic slide. You were looking to get in some of these equities. Snapchat ain't going anywhere, folks. All right, Snapchat's going to be around. We'll talk a little bit more about some of these companies, but you're talking about from $83 down to $30. We'll be right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, welcome back, folks. We got stocks open and we got stocks trading lower yet again. We're talking about within a few points of session lows right now in the S&P. You're trading down 75 points. Talk about an acceleration from where we were at about 3 a.m. this morning, let alone where we were trading in the markets at about 7 a.m. this morning. You have the S&Ps, folks. You almost can't overstate where we were when most of us woke up and started looking at this market. You had the S&P futures at 7 a.m. this morning, trading at 43.86. Talking about 70 points, 70 points just in the last 2.5 hours, let alone we're positive by 75 on the session, and you were trading as high as 44.25. You're talking about 100 and I can't talk that fast. 108 points lower from where we're at 3 in the morning. Whew. Watch out. NASDAQ 100 down 1.6%, down 238 points. You got the Dow down 1.2% right now as well. What else we have going on? So we talked about, we have Apple on Thursday. We also get Microsoft earnings, I believe, this week. Jumping over to the earnings tab. Yes, we do. We get Microsoft earnings tomorrow. Microsoft trading 1.96% lower today, about 2% negative. You're trading at 290. You jump over to the daily, quite the pullback from Microsoft. You look where we were for the quarter, we almost gave it all back, right? Remarkable, man. You come into the year in terms of 2021, you trade up to basically $350 in November. You almost hit that number on December 29th. You trade up to $344.30. Just like that, we give it all back. Folks, the whole quarter, the whole final quarter of 2021 has just been taken back almost on Microsoft shares. Now, Microsoft in the news last week a lot because of the Activision bid that they are going over Activision Blizzard, ATVI, there's their pop. Now, the interesting thing here is this one's really pulled back from the price. I think they're talking about $95 is the price that they'll be purchasing Activision, all cash deal. You're trading at 81. Maybe investors see some type of resistance on antitrust or something like that. I mean, the tech stocks are already kind of in the sights of politicians for some regulation potentially. Maybe this type of a deal. But interesting that it is that far away from the purchase price, considering the probability that you'd assign to it in that degree. But Activision, nonetheless, a little bit higher today. Jumping around to some of the other tech stocks, let's take a look at Tesla. Down 3% at 914. Uh-oh, watch out for Tesla, man. You're coming back down to this area. We're at 1221. 886 is the low there from December 21st. We've now kind of closed this gap yet again that we had from October 22nd. $800 totally in play. Totally in play if you break this level. We bounced there on one occasion, but you make it through that $900 level. Next round mark is $800, and we chopped around there for a period of a couple weeks going back to September. For Tesla shares, we jump over to Google. Google pulling back to 25.32. Man, Google was quite an outperformer last year and pulling back a bit. Now look at Google. Google gives back greater than the quarter, okay? I mean, it's just remarkable. We could go over and over, but Google, the final quarter, October 4th, you got 26.23. You trade up $400 to $3,037, and we give it all back. We are now back in Google to June prices. Watch out. Let's see how ARK is trading. Probably not a good day, unfortunately, as the demise of growth stock continues. You're down another 4.3% for this ETF, Kathy Wood. Pre-pandemic levels, you're talking about 60. You could have been in this fund prior to COVID, and you are up 10% over 2 years. I'll leave that one right there. Let's jump around to commodities. We got crude hanging pretty steady at about 83.58. You look at this long-term chart on crude, right? Basically no pullback. You're sitting right near all-time, the recent highs, I should say, from October. Gold holding up relatively well, up about $5 at 18.37. Let's see how the VIX is reacting on the open this morning. You got the volatility index trading at 33.62. There's your 5-minute chart, right near the highs of 33.96 so far on the VIX. And you know what? I was saving this one, but let's jump over to it, man, because that football game, I hope everyone had a chance to watch some football this weekend. Let me try and pull this up real quick because, man, it was quite a weekend of football, folks. So you come into the weekend with 8 teams remaining, all right? The Bucks down 27-3 at one point, come back and tie the game 27-27. End up losing to a field goal. Great game overall. The game of the weekend, though, well, let's do it this way. First of all, you have 4 games, all right? As people who are in the market that enjoy statistics, that enjoy probabilities, okay? I'm going to have to get some of the statistics at the next break for the game last night between the Bills and the Chiefs. But just on a remarkable weekend, you have 4 games. You have Tennessee, who's the number 1 seed in the AFC, they got a bye. You only had 1 team from each conference getting a bye. Tennessee got the bye in the AFC. They're the number 1 seed. They lose playing the Bengals. Then you have the Packers playing the 49ers. They lose. The Packers lost. After the first drive of the game, Rodgers marches down the field, scores a touchdown on the first drive of the game, and they go up 7-0, and they proceed to lose that game to San Francisco without San Francisco scoring a single offensive touchdown. The odds of that happening, folks, are not high, to say the least. You had 3 underdog teams win on last-second field goals. You had the away team win on a last-second field goal in 3 games leading up to last night. Then you get the game last night, folks. The Chiefs won in overtime. The final 2 minutes of regulation was amazing. I think there were 3 touchdowns. There were 200 yards passing. It's the only time in the NFL history that both quarterbacks have finished with a rating over 123. It's the only time in history that you had a Bills receiver by the name of Gabriel Davis, I believe, who caught 4 touchdown passes in their loss. That's got to be struggling. It's the only time in history that you had both quarterbacks talking about for the Bills and for the Chiefs in terms of Mahomes and Josh Allen. Both quarterbacks threw for 300 yards, 3 touchdowns, no interceptions, and had 50 yards rushing. Only time that's ever happened. So you got a receiver with 4 touchdowns. You have 2 quarterbacks playing probably the best game on both sides, the best game with 2 quarterbacks I've ever seen. The statistics don't lie. There's never been a game like it where both quarterbacks have performed as well as they did. And then you add the complete just hysteria of the end of the game. The Bills score a touchdown to go up by 3 points with 13 seconds left. That was after, I'll do it this way first. If you weren't watching, KC scored with a minute left to go up by 4. Okay? So that, you think, eliminates the possibility for overtime. Buffalo has a minute left. They're down by 4. They come down the field and score in 45 seconds about to take the lead by 3. Kansas City has the ball with 13 seconds left. They are able to run 2 plays. Each play gets about 20 yards, brings them down the field. They kick a field goal to tie the game as it expires. The coin flip goes Kansas City's way, and they march down the field and score a touchdown. Don't even give Buffalo the ball. The one thing I will say is the NFL, excuse me, they should figure out better overtime rules, because in 2018, the last title that the Patriots won with Tom Brady at the helm, the Patriots played the Chiefs in the AFC Championship game, went into overtime. The Patriots won the coin flip. Brady takes the ball down the field. Mahomes doesn't even get to touch it. They go on to win the Super Bowl this year. KC wins the coin flip. They take the ball, go down. Josh Allen doesn't even touch the football. Seems like both teams should get a chance to touch the football in overtime. Quite a game, quite a weekend for the NFL. All right, back to the market, folks. S&P catching a little bit of a pop. We're almost 20 points off the low right now. We'll take a look at some of the other equities we got coming up this week. Stay tuned, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&P negative 63 points right now, jumping back to Tesla. So Tesla down 5.7%. Tesla with their earnings as well this week. So you jump over to the Analyze tab, we jump the earnings January 26th. So we get Tesla out with their numbers on Wednesday. I believe, was it Microsoft out tomorrow? Microsoft out Tuesday. Apple out Thursday. We also get Intel out on Wednesday. Boeing out with their earnings on Wednesday as well. You see, folks, the things are going to pick up. I mean, this guidance in terms of earnings. Now, I jump to that and I say the word guidance because checking out different articles this morning, Morgan Stanley, winter is here. You're a Game of Thrones fan out there? Winter is here, folks. For stocks, markets not yet priced for decelerating growth is what they're talking about. Morgan Sachs strategists see disappointing earnings guidance. We're going to get a lot of guidance this week alone. Apple, Microsoft, Tesla, Boeing, Intel, Johnson & Johnson, Halliburton, IBM, American Express. I mean, look at this list, Rose. I could just spend the whole show going to our earnings companies we got. IBM, I think they're probably out with their numbers after the bell tonight. Yes, they are. Robinhood is out with their numbers, I believe. There's Robinhood down another 4.6% today. Yes, they are out with their numbers. What is that? Thursday, January 27th. Looking at other companies we got coming up. We have Verizon out with their numbers this week as well. I think Verizon is out Thursday. Is that right? When's Verizon? Verizon is out tomorrow. Verizon out with their numbers tomorrow. American Express out with earnings this week, tomorrow as well. So we got a bunch of real number earnings coming out, and we'll see how that goes. Markets hitting back to session lows right now. Checking back to the S&P, you're negative 75 points. And that is quite a pullback. Talk about these are 5-minute bars, folks, and you just dropped 30 points from when we were trading 5 minutes ago. Watch out for the volatility. We just made the session low of 43.08. Markets dropping. NASDAQ 100 off 304 right now. Remarkable. All right, now we're going to jump back to Bitcoin for a second and give you a cautionary tale of treating something as a store of value, which is not a store of value. All right, you want to treat something as a high volatility, high risk investment. That's great. Load up the truck with everything you can afford, as long as you realize that what you're trading might go from 70,000 to 30,000 in the span of a couple months. Now, I say that because there's been a big trend of people adopting Bitcoin, trying to get paid in Bitcoin. It's one thing if you're a multi-millionaire and you got $100 million in the bank, you sign a $5 million contract and you say, I'm going to take that $5 million and put it into crypto. Be aware of this, folks, because many people cannot afford to make the mistakes that some NFL players have been making. And in particular, check out this one. So let me pull this up. Oh, shame on me. Where are we? Here we go. So the headline goes, Odell Beckham Jr.'s crypto investment. Odell Beckham Jr., one of the best wide receivers in the NFL. Crypto investment falters, lost a ton of his playing salary. So he signed a deal worth $4.25 million. Only $750,000 of that guaranteed. $4.25 million. A lot of that having to do with statistics, what happens during the season. And he announced that he would take that in Bitcoin, okay? Now, on November 12th, watch this. This is just a lesson, folks. This is how things work. November 12th. There is November 12th. 65,058 Bitcoin was trading at. Mr. Odell Beckham Jr. signed a deal on November 12th with the Rams. That's the day he signed it, folks, okay? Signed a deal with the Rams worth, I think he was let go of Cleveland. Things just weren't working out there with the quarterback. He was not, he's an eccentric fellow, to say the least, so things were not working out. Signs a deal November 12th. He says, give me my money in Bitcoin. At the time, Bitcoin, 64,293. They're going to have to update it because Bitcoin's not above 35,000 anymore. But he signed that deal. He took it in Bitcoin. He's going to be taxed on 750,000. Okay, because that's what he got paid. Because they will tax you on the dollar amount that they give you. He earned $750,000, and he decided to get paid in Bitcoin to the tune of $750,000. That is earned income. That is taxed. That's the way taxes work. He then takes that $750,000 in Bitcoin, and guess what? Well, now he's got a nice loss he can use to offset some taxes potentially in the future. But guess what? He basically just lost all of his income. Because what do you have to do? In California especially, you're talking about 50% taxes between federal and state. He basically paid 50% in taxes and lost 50% in the investment value of the asset, and he's left with no money for playing for the year. That is a real deal, folks. Okay, when you're taking something that you've earned, okay, so he got paid $750,000. If you're working a salary, right, you're going to have that money taken out immediately from that salary. That's how things can work there. But we have to figure out, folks, is that it's a super high level risk investment, which many people are not aware of. Super high level risk, many people are not aware of. The normal person making 60 grand, 70 grand, 80 grand, you know, number one, you can't just take all your money in crypto because you have to spend it in dollars, but you get the point. Be careful of it. Taking money that you have to pay taxes for, putting it into crypto, you have to pay the taxes anyway. By the time it actually comes time to pay the taxes, you don't even have the money left to pay it because you've lost so much in crypto. Odell Beckham Jr., not the smartest move out there, but guess what? He's got enough money to do it. It's a dicey game when people who don't have the money to do it, but nonetheless, he's basically playing the season almost for free. Although they are still in the playoffs. The Rams, quite a game this weekend as well. All right, jumping around to what else I had pulled up here to talk about a bit. Where are we? Yeah, I jumped down basically all the stocks. You got Comcast and you got Discovery getting upgrades a bit. So Discovery gets an upgrade to overweight from neutral at Piper Sandler. Several factors, including the financial services company's valuation. Excuse me, that's Discover Financial. I was thinking Discover the streamer, because Comcast gets an upgrade as well to outperform from sector perform. Subscriber growth concerns have been overblown. Comcast added 1% in the pre-market, and this is one. If you're taking a look at getting into Comcast, they are a strong company, folks. They're up 1.95% today when the market's getting pummeled. And you got quite a pullback here. You know, you pull back to basically where we kicked off 2021. You're within a stone's throw of where we were at the beginning of 2020, and you back things up even a little bit further for the 5-year weekly. I mean, you see, we're kind of over that level, but you were just trading at 62. You basically got a 20% haircut for Comcast, and they get an upgrade today. But this market not getting an upgrade, man. Everything's starting to accelerate. Even the Dow now off 1.6%. I've been talking about these trend lines a lot, folks. And I like to say, you don't have to be a brilliant technician, right? Let's remove these accelerations to see that this is a decisive break, to say the least. We've been in this trend since the bottom of the pandemic. Very well-defined channel line to the upside. That channel line just got destroyed. You check out the Qs, talk about getting destroyed in similar fashion. Now, this channel line going from basically September or October of 2020, when the markets really started to accelerate. Boy, the Qs, you talk about, we just gave back, what is that, $64 in the Qs. And again, a decisive break to the downside out of that channel line on the Qs so far this morning. Let's jump around and see how some of the FANG stocks are reacting as we come into the final break of the program. We got Apple shares down 1.7% as they come into their earnings this week. We got Microsoft shares down 1.8% as they come into their earnings. Intel down about 0.9% so far this morning. Tesla, the slide continues, down 8%. Tesla with their numbers today. Seems like 800 is the next stop for Tesla. That's where we kind of began 2021. You go below 800, 600's right there. Don't forget how far Tesla came, man. You were trading at $70 at the COVID lows. You were trading at $200 to begin 2020. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. You want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage. The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps down 80 points right now, and again, catching a little bit of a pop, but you almost can't even see it on this chart. S&Ps just jumped 19 points from the low we made to kick off that bar. Let's put it on a 5-minute chart to see where we were actually. Yeah, S&Ps just jumped in the last 4 minutes or so, but man, no bounce there on those charts as we are falling, and we're falling pretty fast, as they said in the YouTube Tigers Den. Second wave of selling starting. Yeah. Pretty tough to deny that one with the way that this market is going. Jumping around to some of the other headlines that caught my eye this morning. Crude dropping as well. Look at that drop off, right? This is a 5-minute bar. Crude just gave up $1 in the span of 15 minutes, folks. Watch out. We got action everywhere in this market right now. Now, crude, a couple headlines out there, of course, with the market. Saudi Aramco says oil demand's nearing pre-pandemic levels. Very optimistic about the market, is how they put it. And the other one I wanted to touch on was real estate real quick, as you got Blackstone buying Resource REIT in a $3.7 billion deal. They're going to scoop up 12,600 units in 13 states, 42 garden-style apartment communities, Texas, Arizona, Florida, Colorado, and Georgia. This transaction represents a continuation of a high conviction investing in top quality multifamily communities in growth markets across the U.S. Premium of 63% to the company's most recently published net asset value of $906 a share. Now, that REIT does not trade, okay, but nonetheless, you're talking about quite a premium. Private capital, private equity, scooping up real estate. It continues, folks. 12,600 units, $3.7 billion. Not bad. All right, stay tuned, folks. We should have an interesting day, to say the least. We got our man Basil Chapman. He's coming up live next. We have our man Larry Pesavento. He is back, folks, feeling good, live at 11 o'clock this morning. Fast Market at 12. Steve Rhodes program coming up at 1 o'clock. Our man Dave White live at 2 o'clock. And my dad, Tom O'Brien, he's back to wrap things up from 3 till 4. Quite a week in the markets, folks. We got a Fed meeting starting tomorrow. We have Apple earnings, Microsoft, Tesla, Intel earnings on top of it. We have a press conference with Chairman Powell, 2:30 on Friday, and we got markets, folks, in a sell-off as we got the S&Ps down 1.8% to kick off the trading week. Stay tuned, folks. Basil Chapman coming up next. Have a great Monday.